So I want you to imagine just for a second that you walk into work tomorrow morning and your company has just announced this massive immediate pivot to artificial
Right,
intelligence.
total panic.
Exactly. Every single department, every workflow is changing overnight. And to celebrate, they basically toss you the keys to a brand new, absolute state-of-the-art Formula One race car.
Oh, man.
Yeah, it's gleaming, it's thrilling, but there is a huge catch. You've never even driven a stick shift.
Let alone an F1 car.
Right. You have literally no idea what the 50 different buttons on the steering wheel actually do. And that mix of, adrenaline and just outright panic, that is exactly what is driving the corporate world right now.
It really is. I mean, the technology has arrived so much faster than the actual human capacity to safely operate it.
Mm.
And it creates this incredibly dangerous situation for a business when the tools basically outpace the talent.
Absolutely. So, welcome to today's deep dive. Our mission today is to explore how this rapid, almost frantic integration of AI is, well, it's completely rewiring how enterprise workforce training actually works.
A massive shift.
It is. And to see how this panic is playing out behind closed doors, we got our hands on a really fascinating stack of internal documents and financials from Skillsoft.
Yeah, specifically, we're looking at their Q4 2026 earnings report. That's dated April 7th, 2026.
Right. And we also have the accompanying executive call transcript, their slide deck, and some really detailed financial analysis to go with it.
And we are, digging into these documents to answer a really massive question that's just hanging over the entire labor market right now.
Which is what?
Well, is AI going to eventually replace the need for human skills development altogether? Or is the sheer complexity of AI actually triggering this unprecedented boom in corporate learning? Because, handing someone those Formula One keys without training isn't just inefficient, it is a massive liability.
Yeah, you're going to crash the car. So we are going to look at the hard numbers, the strategic pivots, and what this means for you, the listener, as you try to stay relevant in this modern workforce. Because to understand where corporate training is going, we first have to look at the financial reality of a legacy company trying to turn the ship.
Right. And it's a big ship.
It is. Looking at Skillsoft's Q4 2026 numbers, we are seeing a company undergoing a radical and honestly sometimes pretty painful transformation to become what their CEO, Ron Hovsepian, calls an AI-native skills platform.
Yeah, and when you look at the top-line numbers, it is really clear that this pivot comes at a cost.
A steep cost.
Oh, yeah. Total Q4 revenue actually declined by 2.3%, down to $130.7 million.
Wow.
And their GAAP net loss widened to $36.7 million. Plus, they missed their earnings per share target by a penny.
Okay, so I want to translate some of that corporate finance into plain English for a second. That widening GAAP net loss was largely driven by what the report calls intangible impairments and restructuring costs.
Right, which sounds very technical.
It does. But for anyone not living inside an accounting ledger, an intangible impairment essentially means the company had to officially declare that some of their older legacy digital assets or brand values they aren't worth what they used to be.
They are essentially writing off the past.
Exactly. They're writing off the past. But still, if I'm just glancing at the headlines, taking a $36 million loss looks like a pretty huge stumble. Are they just cutting costs to dress up the balance sheet, or is this a genuine strategic reinvestment?
Well, see, that's the thing. Top-line revenue and GAAP net loss. They only tell the story of what they are leaving behind.
Yeah.
To see if this new strategy is actually viable, you have to look at the underlying health metrics.
Okay, like what?
Specifically, their adjusted EBITDA and their free cash flow. Adjusted EBITDA shows us the profitability of their core operations by, stripping out all those one-time write-offs and restructuring costs.
Right, the stuff that muddies the waters.
Exactly. And on that front, Skillsoft hit $31.2 million,
Okay.
which is a very healthy 23.9% margin.
Wow, okay. And their free cash flow actually doubled year over year, right, to $26.5 million for the quarter.
Yes.
So they are generating significantly more actual cash on hand, even though overall sales kind of dipped.
Yeah, and CEO Hovsepian described this as demonstrating financial durability. They pulled off this massive operational turnaround by slashing $45 million in gross costs from the business.
Which is a huge number.
It is, but here's the key. They didn't just pocket that money to make the balance sheet look pretty. They took about half of those savings and immediately reinvested it directly into their go-to-market strategies.
So meaning hiring the sales teams, building out the marketing funnels, stuff like that.
Exactly, getting this new AI product directly in front of enterprise buyers.
All right.
and also accelerating their AI product development.
It's like they decided to completely rewire the electricity in their house, but they had to do it while they were still living inside it.
Right, without ever turning off the power.
Which is so risky. And they did this against a backdrop of severe macroeconomic uncertainty, too. I mean, the executives noted a highly cautious enterprise spending environment, and there was some churn in their federal government contracts early in the year.
Yeah, it was an absolutely unforgiving environment to try and execute a $45 million pivot. But, I mean, it highlights the urgency.
They had to do it.
They recognize that continuing to operate as a traditional learning company was just a slow road to irrelevance.
Well, if they are bleeding cash and squeezing the legacy business to fund this massive AI remodel, the market better be absolutely desperate for what they're building.
Oh, and it is.
Because the financials show us the cost of the pivot, but it's really the engagement metrics in these sources that reveal whether enterprise customers actually care.
And the demand is absolutely showing up in their scaled platform usage. I mean, the numbers are staggering.
Let's hear them.
AI skill benchmark completions surged by 994% year over year.
Wait, almost 1,000%?
Yes, 994%. And AI content completions went up 261%. AI journey completions increased 222%.
Okay. My first instinct when I see a 994% jump in AI benchmark completions is to assume this is just, corporate panic buying.
How do you mean?
Like, an executive reads a scary article about AI, completely panics, and forces HR to make everyone in the company take a multiple-choice AI quiz.
Just so they can tell the board of directors they're innovating.
Exactly. But when you look deeper into how these tools are actually being used, it looks like pure self-preservation. Organizations are terrified of the liability.
Oh, absolutely. And Hovsepian addressed this directly on the call. Deploying AI without demonstrable verified skills creates severe, immediate business risks.
Right.
If you give an untrained employee powerful AI tools, you open the company up to poor decision-making based on AI hallucinations.
Which we see all the time.
Exactly. Or massive data compliance exposure if someone, say, pastes proprietary code into a public chatbot. And ironically, it can actually lead to lower overall productivity.
Going back to that Formula One car analogy, if you don't know how to drive it, you aren't just going to lose the race, you are going to crash into the wall and destroy the vehicle.
Spot on.
So organizations aren't just buying this content to check a box. They are desperately trying to verify that their workforce won't accidentally break the company.
Right.
Which brings us to a really interesting product mentioned in the report called Skillsoft. Their AI simulation product saw a 146% increase in learners and a 341% jump in total engagement.
Yeah, and CIY is critical to understand here because it moves way beyond just traditional video learning. It is an actual interactive AI simulation.
So it's not just a video you click through.
Not at all. Employees aren't just watching a tutorial on how to prompt an AI. They're actively role-playing in a simulated environment that evaluates their responses.
Wow.
It tests their soft skills in difficult management conversations, and it provides real-time feedback.
And we are seeing this move from just individual training into massive structural changes. Like the earnings transcript highlights a global healthcare organization that signed a multi-year partnership with Skillsoft.
Right, to operationalize an AI-first operating model.
Exactly. They aren't just training a few IT guys in the basement. They are fundamentally changing how the hospital system operates.
Another really vital example they brought up is Singapore's largest telecommunications provider. They actually chose Skillsoft through a highly competitive process to support an entire AI-led workforce transformation mandate.
That's huge.
It is. The telco is creating an internal AI academy, and they're piloting AI-augmented job redesigns.
Okay, let's pause on job redesigns for a second because that directly affects you, the listener. A job redesign means the fundamental daily tasks of your role are completely altered.
Right. The job isn't the same anymore.
Like if you were a data and entry clerk, AI is now doing the entry. Your job is redesigned to be a data auditor. So AI isn't displacing the need for skills development. It is widening the skills gap so fast that companies have to rapidly translate AI advancements into true role-based execution.
Yeah, it completely flips the narrative that AI will just automatically do the work for us. The integration of AI actually requires a more highly trained, highly verified human workforce to manage it.
Which makes sense. But if enterprise customers are redesigning their entire workforces using these tools, and engagement on AI platforms is up hundreds of %, There is a glaring paradox on the balance sheet here.
Your overall revenue.
Yeah. Why did overall revenue still shrink by over 2%? What is the anchor that's basically dragging down the rocket ship?
Well, the anchors are their legacy operations, specifically the consumer business and a massive segment called Global Knowledge, or GK. Their enterprise business, Talent Development Solutions, that actually hit a positive revenue inflection point. However, the consumer side of that segment, which makes up about 9%, is in continuous decline.
But the much larger issue weighing them down is that global knowledge segment, right? GK revenue fell 9.4%, down to $28 million for the quarter.
Yeah, it's struggling.
And management even announced they are in active discussions to potentially sell off the entire GK segment.
And this is where global events just completely crash into corporate finance. According to CFO John Frederick, 20% of the global knowledge business is directly exposed to the Middle East.
Oh, wow.
Yeah, and from a strict market perspective, the geopolitical instability and the ongoing conflict in that specific region is making potential buyers incredibly hesitant.
Of course.
You have potential buyers physically located in a volatile market, which basically creates these trapped costs for Skillsoft while they try to navigate a sale.
And beyond the regional instability, there is also a much broader market shift away from instructor-led training, or ILT, which is global knowledge's traditional bread and butter.
Right, the whole classroom model.
Yeah, companies just don't want to fly 50 employees to a hotel conference room to sit through a 3-day seminar anymore. It's too slow, and frankly, it's way too expensive.
Exactly. The heavy physical infrastructure of instructor-led training is entirely at odds with the fast, scalable, software-driven model that Skillsoft is trying to build with their AI platforms.
Well, wait, the CFO mentioned on the call that the EMEA portion of GK, so Europe, Middle East, India, Africa, is actually starting to look like a decent performer.
He did.
So if parts of it are actually working, is entirely ditching the segment a massive overcorrection? Like, why not just fix the broken parts and keep the revenue?
Well, it really comes down to the difference between renting a capability and owning the factory.
Okay, unpack that.
So CFO John Frederick noted that Skillsoft still sees high value in the learning modality of global knowledge. I mean, sometimes people really do need a live instructor in a room,
Sure.
but Skillsoft realized they don't need to own the heavy, costly infrastructure like the logistics, the scheduling, the physical overhead to provide that value to their customers.
Right. They can just partner with whoever buys GK or even other third-party providers to offer instructor-led training as an add-on.
Exactly. By shedding the GK segment entirely, Skillsoft simplifies its business radically. They remove the trapped costs and all those logistical headaches. They want to be a pure software platform.
Focusing entirely on their high-margin, high-growth AI software rather than acting like basically an event management company.
Exactly.
So they shed the physical classrooms, they take the financial hit to cut legacy costs, and they funnel all their remaining resources into pure software. What is the actual product they are betting the entire future of the company on?
The future of the company rests entirely on the Percipio platform and their skills ontology.
Skills ontology.
Yeah. In February, they officially launched their new AI-native Percipio platform and instantly secured 15 paying enterprise customers.
Wow. Right out the gate.
Yep. And they also formed a strategic partnership with edX to bring university-led learning directly into this system.
Okay, but skills ontology sounds like something straight out of a sci-fi novel.
It does sound a bit academic.
Right. And in plain English, we hear companies use the word platform all the time, usually just to describe, like, a web portal with a login screen.
A glorified website.
Exactly. So from the perspective of the actual employee sitting at their desk, what makes this different from a standard learning management system where I just, aggressively click next on a compliance video until it finally ends?
Well, the difference is moving away from what Hovsepian calls point solutions. Historically, a company might use one vendor for a learning management system, another piece of software to track employee performance, and a third company just to buy training videos from.
Right. Totally disjointed.
It's a fragmented nightmare for the employee. Skillsoft's strategy brings content, platform, and data together into one unified system. And the engine that is powering that integration is the skills ontology.
Okay, let's break down how an ontology actually functions, because it isn't just a library of content, right?
Not at all. An ontology is essentially a massive, highly structured map that understands the deep relationships between different concepts.
Okay.
Skillsoft has 20 years of enterprise learning data. They haven't just stored thousands of videos. They have meticulously mapped specific pieces of content directly to specific job titles, industry domains, and the precise micro skills needed to execute those roles today and in the future.
So imagine you were a mid-level financial analyst. The ontology doesn't just know your job title. It knows the 30 specific tasks you do every single week.
Right.
And the platform analyzes the market, realizes 20 of those tasks will be entirely automated by AI in 2 years, and actively starts serving you specific AX courses or CIZY simulations on advanced predictive modeling.
Exactly. So you aren't obsolete when the AI takes over your current workflow.
That is wild. It is literally a personalized GPS for your career inside that company.
It explicitly maps your current capabilities against the future needs of your specific role.
Yeah.
And as AI completely redefines what your job even is, that map becomes vital for employee retention and corporate survival.
Now, looking at the financials, this transition to the unified platform hasn't been completely flawless,
Yeah,
right?
there's been bumps.
Yeah, the company's last 12 months dollar retention rate, which tracks how well they retain and upsell their existing customers, actually dipped to 98%. It was down from 105% the previous year.
Yeah.
So they lost a little bit of ground with their existing base.
They did, and management attributed that dip to the churn in federal contracts and that highly conservative enterprise spending earlier in the year that we talked about.
Right.
However, they explicitly stated they expect the rollout of this new Percipio platform to drive that retention rate back over 100%. The business logic is that once an enterprise customer integrates this deeply mapped ontology into their HR infrastructure, it becomes too valuable and too structurally embedded to ever leave.
It becomes very sticky.
Well, let's bring this deep dive full circle. We started by looking at a somewhat mixed Q4 2026 earnings report for Skillsoft. Revenue is slightly down, and they took a significant GAAP net loss.
Right.
But as we've unpacked the mechanics behind those numbers, it is really clear this is a real-time, high-stakes case study of the global corporate scramble.
It is. Companies are desperately trying to shed their legacy training models, like heavy instructor-led classrooms, so they can invest massive amounts of capital into AI skills verification.
Because the cost of an untrained workforce in the human plus AI era is just simply too high. I mean, a 994% increase in AI skill benchmarking doesn't happen because executives suddenly care deeply about employee education.
Oh, definitely not. It happens because they are terrified of the liability of an unverified workforce operating incredibly powerful tools. The value of an employee is rapidly moving from what do you know to how securely and effectively can you operate alongside artificial intelligence.
Exactly. It requires a fundamental shift in how organizations view human capital. You can't just buy the AI software. You have to actively redesign the jobs of the people using it.
Which means it's time for you, the listener, to take a hard look at your own workplace tomorrow. Are you still being offered random, disconnected training modules once a year?
Just checking boxes.
Yeah. Or is your company actively mapping your skills using something like a skills ontology to prepare you for AI integration? Because if they aren't, they might be falling really behind the curve that companies like Skillsoft are currently building.
And as we wrap up, it's really worth considering the broader implications of these unified AI-driven learning systems.
Yeah. I actually want to leave you with a philosophical thought regarding this technology. We've spent this entire time talking about the brilliant efficiency of these new AI native platforms.
Right.
But if a system like Percipio becomes perfectly capable of mapping every single skill gap in a company's entire workforce and then automatically assigning the exact training modules to fill those gaps before you even know you have them, what happens to the human serendipity of career growth?
That's a great question. We have always viewed career progression as this messy mix of personal ambition, unexpected discoveries, and, trial and error.
Exactly. Are we moving toward a future where employees are simply optimized, monitored, and patched to fix vulnerabilities exactly like software updates?
It's a bit dystopian when you put it like that.
It is. If the AI ontology knows what you need to learn before you do, what does that mean for your personal career autonomy? Who is really driving that Formula One car? You, or the algorithm telling you exactly when to shift gears?
Wow.
Something to mull over next time you get a notification that a new mandatory training module has been added to your queue. Thanks for joining us on this deep dive. We'll catch you on the next one.